Hello guys, welcome to another video. So I've decided that since I went for like 6 days without giving you a video, so now I'm gonna try and give you like maybe one video in 2 days or one video a day if possible, né? So yesterday we looked at VIX 75, and so if you haven't watched that video, make sure that immediately you're done watching this one, you can watch the other one so that you see how I do the breakdown of the markets, from the highest time frame all the way to the smallest time frame. That's how I do it. That is how even the guys that I'm teaching, that is what I'm teaching them, so that when they are alone looking at the chart, they should know the approach that they'll take, so that at the end of the day, when they reach their smallest time frames where they'll be executing, they know what to look for, right? So let's get started. So if you haven't subscribed, make sure that you subscribe, so that, and also hit the bell icon, so that when I make uploads, you get notified. All right, let's get started. You know the drill now. We always start with the highest time frame, and we go all the way down until those time frames where we'll be executing. So this is our monthly chart, and we're looking at gold today. So with gold, I'm sure you know the structure here hasn't changed from the video that we made last week. The other week on Sunday, we made a video on gold. That was the last time we looked at gold. So now the structure here, I was mentioning that anywhere from here, you can look at it as an area of, let's just put a horizontal line just to check if it was hit anywhere from around here. Not yet hit, but it seems like the price is already sort of feeling the hit because it's moving away from it. So anywhere from there, the price is most likely going to find support. But another area of support, or the nicest one, will be this one here. But anywhere from this horizontal line, the price is going to start to react. So it all depends, going to depend on how this month is going to end. You see already we have got a bullish candlestick, but we cannot yet comment and say we have got engulfing on this time frame. No, because this time frame, by the end of the month, the candlestick can still come down and close there, you see. So for us to comment on this candlestick being engulfing, being a strong candlestick and stuff like that, we will have to wait for it to close first. So for now, we are saying anywhere from there, the price is going to react, and it's most likely going to go up until somewhere there. It might not go in one go like this. It might play around, but when you're leaving an area of support, normally you are targeting the next opposing structure, which is going to be your resistance, because in this case you don't have a bearish trend line, right? So anywhere from there, we'll be waiting for that. So if the month closes and you find that the price closes with a similar candlestick, it means you're going to say, on my higher time frame, I found a bullish candlestick which is engulfing the previous ones. So that could be a sign that if on my smaller time frames I get pullbacks, I can buy those ones, because I know that my monthly is supporting or is backing up what I'm doing on those smaller time frames. But for now, we don't know how far. We don't know if this is the real impulse, or this is just a pause here before we carry on into the deeper stronger areas of support. We don't know about that. We'll just see how the month is going to close. So that's basically all that you can comment on this highest time frame. And you can see that basically the price is too close to the support, meaning those trades to the upside, especially the trades that you're planning to hold for a week or two or so, you need to make sure that they are they are higher odds if they are pointing to the upside, because the time frame here is also saying we are approaching an area of support. So that's all that you can comment on with the monthly chart. So let's do the next time frame, which is the weekly, and see how is the structure here. So on weekly, the price here, the lowest we reached was this. So meaning the weekly, we can use this zone. You can use this pin bar here as your weekly area of support. And then now when remember, the structure here looks slightly different to what you had on monthly, because on monthly this was just one smooth move. Now on weekly, because there's a lot of candlesticks within a month, you will find like 4 weekly candlesticks, or 5. Yes, it's 4. So you'll find that those candlesticks, they can end up giving you this, but when you put them together into a monthly chart, they don't have any of those pullbacks, just a smooth move. So these long tails you are seeing here on your weekly chart, they're going to give you a lot of candlesticks, which is what you're gonna see here when the price is having something like that, right? So now it means on this time frame, when the price was moving to the downside, I told you that I already showed you that, commented on this one saying this is your support on weekly, this is your weekly support that's currently active, and this is your weekly. You can use this small candlestick here. This is your weekly resistance that is still active, and this is your weekly bearish trend line that is still active. Remember, there was a time when we had this setup. When was it? I think 3 setups or 2 setups back on this gold, when we were calling for shorts at this area, and the price did move to the downside. Now it's coming to the same zone for the second time. Is it a good thing for us to sell and hope that this will be that push into, remember, into that monthly support that starts from somewhere here? Remember, the monthly was missed, so we don't know whether this is gonna be, it's a good idea for us to sell and hope that now we will push into that, because weekly is still bearish, right? So you wouldn't be wrong in looking for selling trades, but now you need to keep in mind that the weekly resistance you are at is not fresh. It was fresh when you were coming for the first touch. Now it's no longer fresh because it has been hit before, meaning some of the selling orders they have been collected. So now the selling force is no longer the same. It's no longer as strong as when you're getting the first touch. So the price might still fail there. So meaning now, yes, the trend is still bearish. You are still more than welcome to sell, and you need to wait for confirmation because the zone is not fresh. So meaning when you're selling, you're still targeting the same support. This weekly support, we're not going to look past it and say I'm targeting the monthly one, because this weekly one, this is your time frame. The structure where you're saying you're still bearish and stuff, it's on this time frame. So when you're talking about the next opposite structure, it has to be on the same time frame or higher. So it has to start there, whichever one you hit first. So here the support, yes, even though when you're coming to it, it's not fresh anymore. It was hit here for the first time, it was hit here for the second time, it was hit here for the third time, now it's going to be hit for the fourth time. So even though it's no longer fresh, but it does not mean it's time now for it to be broken. So it can still hold at the price. So that's why when if you get a chance to sell to the downside, you're gonna still exit your trades there. Just let the market decide whether it wants to break and challenge and go to the bigger support on monthly, or if it will bounce again. It will all depend on how, when the price gets to this, how does it react. So based on that, you can decide whether it will push up again, or you'll wait for a breakout and maybe get a pullback so that you can join the movement towards the monthly area of support. But for now, what you need to comment on this time frame is that the price bounced from a non-fresh area of support. The trend line is still holding, we're still bearish, and we have hit a non-fresh area of resistance. We're too close to the resistance. It will make sense that we look for selling trades, but those selling trades must be with confirmation, because of what? The zone that we're selling from is not fresh anymore. And if you look at what we did, basically the zone was formed here, we went back, and then when we came back, we failed to make a new low. Remember, for you to remain bearish, you need to make higher highs. Lower lows, lower highs, lower lows, lower highs. You need to make this. So the day you do this, the day you fail, you are no longer pushing to the downside with the same force, because you can see you are failing to create a new low, which is what we are having there. So this could be a sign of the bears being weak, because of what? They are trying to push down, but they're being rejected. They're trying to push down, but they're being rejected. So this could mean that the sellers are no longer strong, but they are still bullish. They're still bearish. We are still bearish. We still lean towards them, and this is their zone. Their trend line is still holding. Their trend is still holding. So you get confirmation there. You can try and sell. Without confirmation, you don't have a trade. So let's check what you got on daily, because I think we never made a new low, if I still remember what we said in the previous analysis, because this is the lowest point we reached here. We never made a new low. We never made a new low. So basically, we were moving to the downside nicely, and that's when you created this lowest point. And you could put maybe your trend line somewhere there, and then say this is my nice area of support that pushed up and broke that trend line and broke the area of resistance. And when that happened, that's when you're like, oh, now the structure is no longer bearish, because we broke the two key structures of a bearish trend, which is your trend line, a bearish trend line, and also that resistance. So now, because of that, now you can see the prices, basically turned into the thing, into bullishness. So it became bullish. So that's why you could buy from this, and then now it went up, and then it's coming again. The zone is no longer fresh. You get the confirmation there, you buy, and you can see you did have something like a bullish rejection candlestick. So you could maybe use that as your confirmation to say we are still at the very same support that changed the structure to bullish by doing that. So now we're seeing the bulls here, they're still rejecting the price. Maybe you could use that as your thing to end. Then you enter like that. Now remember, you are still at the very same weekly area of resistance. In this case, you can even use this one to say this is the daily area of resistance, which is nested inside the weekly area of resistance. Remember, with the weekly one, the one I'm commenting on is this tiny one. Remember this one. So this is the one that I said it is non-fresh. We are testing it. We've tested it before, but because we're still bearish, we can still search for trades from there. So here we've got what? The resistance is this one that is being tested. And because we didn't make a new low here, we can't put a trend line, right? So meaning if you get a reason to sell there, you'll basically be targeting the same zone, and you're not going to look past it and say we have to go to the monthly one. You get to this, you TP until the price has decided whether it wants to take out the support or take out the resistance, so that it can continue with being in a trend, or continue with the uptrend, or continue with the downtrend. Because if you're in an uptrend but you're not making a higher high, you're not really making any progress. You see, you're not that strong. So I cannot hold for long term. I'll hold until the previous high that you made. Then when you get there, I'm out, because I don't know what you're planning there. You see, so you don't have to push your luck. So let's see H4 and see what we got. Now on H4, that's when things start to get interesting, all right? Because on H4, we can clearly see H4 is bullish, right? And it being bullish, it also has like a bullish trend line. You can draw it somewhere there. And now we had to have a nice zone there, which is a pin bar kind of a zone, not the best zone there. And now remember, we know that we are at the weekly and daily resistance. If the H4 is your selling time frame, right, you will say I've got this area, this candlestick here, which is showing that basically more like a rejection candlestick, but the body being in the middle, saying that it's more like in this, we're not decided there. So maybe you can, I'm not saying you should do that, you can go with the sell limit there. If you're executing H4 is your execution time frame, then you will have to place your stop loss above. And remember, you are targeting this weird looking thing here, or the trend line. But in this case, because the price, what makes it challenging, so that what makes it difficult or sort of impossible for you to execute on this time frame will be that if you put the trend line there, which is valid, and you put this as your valid support, because we're saying it is bullish, right? So we've got two valid structures, right? And it seems like the price from where it is, it will hit the trend line first. And if you check, oh, my battery died there while I was still recording. I was saying that what makes it difficult or impossible for you to execute here is the fact that in this case, you have got this as your nearest support, you have got this as your nearest trend line, right? And remember, if you were thinking of selling from somewhere there, we were saying that you're always targeting the next opposite structure. So in this case, should the price, maybe if it had activated you there, you need to calculate this in advance so that you check if you've got enough space. So from there to where the price has got is most likely to hit your thing, the zone, you can see that when you compare it to where you wanted to put the stop loss, it's not even 1:1. So you're not going to risk 100 just to make 90. It does not make sense. So you always want to make sure that where you are placing your stop loss, the price has got a potential to move double the size of that when it is going to your take profit. So in this case, that's why I was saying, or it's impossible, or it's not, you're not allowed to execute because you don't have enough profit margin. Because if you didn't have a trend line, at least you know that until somewhere there, maybe you'll have 2:1. But now, because the price is going to encounter the first the first opposite structure as what, in a form of a trend line. So you need to calculate the space towards that so that you can decide if that space is enough for you to execute in terms of the size. Is it at least double the size of your zone? Then you can execute. But in this case, it's not, right? And the price, if you look at it, it did try to move to the upside, but still, even if it breaks the range of this, you are not gonna buy as yet because the location doesn't allow you to. Remember, we are saying that the location on weekly, you are inside a weekly resistance. Weekly is bearish, you haven't yet broken the weekly bearish trend line, and so buying now would be suicide. It's very suicide, né? And then let's see now, we said on this one you can take this as your nearest resistance, which is also hit. So you're basically searching, you've got higher odds if you're going to take a sell trade, but it needs to be a calculated move. The space might allow for that, and also the confirmation that you're getting. Remember, the reason why we said we need confirmation for that was because the bigger zones where we are executing from, they're not fresh, so you're not going to go with the limit order. So on H4 you don't yet have that confirmation. So even if the current candlestick was to close as a pin bar, it will be trickier for you to try and sell that, use that pin bar as a confirmation, because now the price has got there's a chance of it hitting struggling to pass around this level, which is a trend line. So now look at the space from where it is and check where the trend line is at. You can see that the trend line is too close to that zone, to the current price action, so it's not worth it. So if you're someone that's executing on H4, the best move will be, even if it gives you the pin bar, you just have to wait for it so that it removes this this resistance that you got here, that is making it difficult for you to trade. I'm talking about the trend line, right? So if the price was to go to the downside and take out the trend line, at least you'll know that the trend line is out. The next structure will be this one. So if you get a pullback, then you'll be taking that. Then the space now you can see is definitely more than twice the size of your risk. So now, for as long as this is not taken out when you're planning on exiting, you need to take it into consideration. So let's check one more time frame, even though I do not like going to the smallest time frames. All right, so this is what your H1 looks like. So we know we don't have to find the H1 resistance. We don't have to find that. We know we are touching the daily support, weekly support, right? So now you can see what the H1 did. It gave you a bearish rejection candlestick. But remember that bearish rejection candlestick, it will make sense if the price comes and break it to the other side. That's when maybe sometimes you put a sell stop so that you'll be targeting the next opposite structure. But in this case, the profit margin, like I already mentioned, is too small, so it's not worth it. I would say the safest way to trade gold right now is to wait for this. Then you're selling the pullback. In that way, you will know that the next opposite structure will be fine, will have enough profit margin, because currently, unless if you want to risk 50, 1:1, and say I'm going to sell, and then I'm targeting this, sell this, put the stop loss above, then target the retest of the trend line, unless if you want to do that. But 1:1 is not something that I will encourage you to do. right? So this is how this is what I had for you in terms of what the gold, where it's most likely going to go from here. But we're not saying the price of gold cannot, continue going to the upside. It can do that, it's possible. But we just say when you are trying to take trades, it's safer for you to know which areas are sensitive so that you don't go against them. So if you want to buy, maybe if this one was taken out, then when you continue buying, you'll be targeting the next one, which is quite far. So until that space is opened, it's not easy, it's not safe for you to execute. Now the only direction that you can lean towards is maybe a pullback towards the trend line. So that's it, guys. So that's what you can expect from gold. We will see where it goes from here, and then I'll try and give you another video maybe tomorrow. So if you haven't subscribed, make sure that you do so. All right, guys, I'll see you in the next one. Thank you.